U.S. home prices remain near record high levels in March, defying expectations for a pullback that never materializes. In today's video, we're going to look at the latest data on the supply and demand sides of the market to get a sense of what we can expect in the months ahead. And then we're going to look at the developments that could happen this year that could shake things up. Let's get into it. The latest data from Redfin, a national real estate brokerage, showed the March median home price in the U.S. was $420,000 on a seasonally adjusted basis. This was down slightly from the record high $423,000 in February and up 5% from the low point of $400,000 in March 2023. Home prices have stayed persistently high in the face of tight supply, although we have seen some movement on that side of the market in recent months. New home listings have been on the uptrend over the last few months as mortgage rates pulled back from the highs seen in October 2023. In March, however, there was a sharp reversal as mortgage rates started heading higher again due to a lack of relief from the Federal Reserve in their decision to keep their Fed funds rate at multi-decade high levels. Mortgage rates are important for sellers, as most sellers who list their home plan on buying another home after the sale and face the same affordability issues as other buyers. On the demand side of the market, we have finally seen a reversal of the decline in home purchases, and they have been actually trending higher over the last few months. This again can be attributed to the pullback in mortgage rates in the first few months of the year. What we're seeing in the latest data is a housing market that is highly sensitive to changes in mortgage rates. When rates go down, we see new listings head higher and more transactions taking place. There is a big lag in the housing market data, however. The most recent March data reflects activity that took place in January and February due to the month or more it can take to close out a real estate transaction. But we can use this lag to our advantage to get a sense of where the market's headed in the next few months by looking at the most recent trends in mortgage rates. After pulling back from the high point of 7.8% back in October 2023, mortgage rates are on the rise again. As of Thursday, April 25th, the average 30-year fixed-rate mortgage was 7.2%, which is up from the recent low of 6.6% on January 18th. The recent highs in mortgage rates is likely to impact both the supply and demand sides of the market. On the supply side, we're likely to see a halt to the recent uptrend in new listings, and on the demand side, we're likely to see another pullback in home sales in the months to come. The median price isn't likely to make any significant moves, much like we've seen over the last year. As for where the housing market is headed for the remainder of 2024, all eyes are on the Federal Reserve. They have their next policy meeting on April 30th and May 1st, at which they will announce their decision on interest rates and provide an outlook. No one is expecting them to lower interest rates at this upcoming meeting, as inflation has been moving in the wrong direction. The latest reading on the Consumer Price Index showed inflation increased by 3.5% in March from the same time period last year. This is up from the recent low point of 3% back in June 2023. The Federal Reserve's target for inflation is 2%, so we still have a ways to go to get there. Now, they've indicated that they don't need inflation to reach 2% before they start cutting their Fed funds rate, but they want to see inflation steadily moving towards that target. The fact that we're seeing inflation actually head higher again means that interest rates aren't coming down anytime soon. The Fed has 5 more meetings this year after this upcoming meeting ending on May 1st, so there's still time to see some rate cuts this year. The rate of inflation will be key to watch in assessing where mortgage rates in the housing market are headed for the remainder of the year. If inflation continues to trend sideways, or worse, continues to head higher, then we can safely assume rate cuts are off the table. I'll be providing updates each month on the latest inflation readings and what they mean for the housing market. The other major development for this year that I'm keeping my eyes on is what happens in the commercial real estate market. There are a lot of commercial real estate loans coming due this year, and there is a lot of risk for defaults and bank failures in the second half of this year. The worst case scenario would be that the turmoil in the financial sector could spill over into the broader economy, triggering an economic recession. This would hit the housing market as it could lead to a big drop in housing demand. In my latest video on the topic, I pointed out that the commercial real estate crash is not imminent right now, but I'm keeping a close eye on it. I'll be releasing another update on that as well in the weeks to come. If you don't want to miss any of these important videos as they come out, make sure you're subscribed to this channel and hit that notification bell down below so you know right away when those videos come out. And if you found this video useful or at least mildly entertaining, make sure to hit that like button on your way out to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.